3 o'clock and the market is still under quite a bit of pressure. 650 points knocked off on the Sensex and the Nifty almost down 200 points. But we're getting you some exclusive stories now. Bandhan Bank, which is in violation of the RBI regulations in terms of promoter shareholding, is looking at merging a housing finance company as a step to reduce their promoter stake. Nisha Poddar is here to give us exclusive details. They had to do something to reduce the stake. So is this what they're going to resort to now?
So management has earlier said that they are open to all sorts of options. So this is one of the big options that we hear from sources with direct knowledge that Bandhan Bank is exploring. We do gather from sources and several of them that I have spoken to that Bandhan Bank is in talks with HDFC Limited to buy out Gruh Finance. Now, I also gather that the construct of the deal could be of merger of Gruh Finance into Bandhan Bank. So that is what is being discussed. Now, remember that there are many aspects to this that we must need to explore if this deal were to really happen. As far as the promoter stakeholding of Bandhan Bank is concerned, it is at the moment at 82.28%. And as per the RBI's norms in August this year, they should have brought it down to 40%. So they're already in violation. With this, at the current market price, they could be coming down to about 60-odd%. So they will still have a 20% of stake to be reduced to fully comply with the RBI guidelines. So they will have to take more steps in this. On the other hand, from HDFC Limited, if it were to sell Gruh Finance in terms of a merger with Bandhan Bank, then in that case, they will land up at the present market valuation having 15% stake in the merged entity, Bandhan Bank and Gruh Finance, which as per the RBI guidelines is again not allowed, and they will have to take approval from the RBI to go above 5% in the Bandhan Bank merged entity. And in that particular case, they can actually come up with various remedial efforts as well to just keep it at 5% by selling off that 10%. So there are many aspects to this particular transaction that needs to be explored further. But the first and most important thing that I gather from sources with direct knowledge is that these talks have been happening for a few months now and is at a fairly advanced stage is also what I gather. So Bandhan Bank in talks with HDFC Limited to buy out Gruh Finance. In fact, we had been working on it for the last few days. If you take a look at Gruh Finance stock, that has really gone up in trade while the overall markets are really so weak at this point.
Okay, well, thanks a lot for that. You know what, let's pose this question to Dipan Mehta. He joins us back now on the show. Dipan, I don't know if you heard my colleague Nisha, but there is a possibility that Bandhan Bank could merge Gruh Finance with itself to bring down that promoter holding. In general, how would you approach some of these names? I mean, and your view on Bandhan itself?
I think it's positive it's a win-win situation for shareholders of Gruh Finance as well as Bandhan Bank. And the Gruh Finance, being merged with a bank certainly is beneficial given the kind of issues which are there with liquidity and raising low-cost funds for housing. And on the other hand, Bandhan Bank gets access to housing finance and they're able to diversify the loan book away from microfinance. And valuation-wise, I think both are pretty much similar. And with HDFC as a major investor in Bandhan Bank post this deal, I think it's great for Bandhan Bank and could lead to a slight re-rating of the P multiples of both the entities. So yes, I think if the deal does take place, it is definitely positive and certainly removes some of the uncertainty around Bandhan Bank, especially its promoter dilution, because that is acting as a bit of a cloud on the stock. Despite excellent performance coming through from the bank, the stock price has been moving sideways for the past few months or so. So I think it's very positive news, but let's see whether it actually fructifies or not.
Right, Deepan, just one more question. What do you have to say about the valuation? If at current market price, this particular deal were to be struck, do you think that for Bandhan Bank, it could be an expensive trade given the way Gruh Finance is trading?
See, Bandhan Bank also is trading at rich valuations. No doubt Gruh Finance is at a higher P multiple than Bandhan Bank. But then Gruh Finance business model is also quite exceptionally good. And if you look at the balance sheet, the quality of the balance sheet in terms of they've been operating for so many years, but they have great control over their collections. NPA levels have been extremely low and they've been able to steadily grow their book at around 15 to 25% consistently for the past several years or so. And it's a nice conservative company with a very good culture and maybe a great fit into Bandhan Bank as well. and the Bandhan Bank also would get access to the human resources of Gruh Finance, which is also a positive. So there's a slight mismatch as far as valuations are concerned, but pretty much it is in the same ballpark. I don't think that there'll be a major issue with Bandhan Bank shareholders because they are buying a more expensive NBFC. I think by and large the P multiples of Gruh Finance seem to be justified given the kind of track record and the growth potential which the company has.
Okay, all right. So we'll stay tuned to that particular deal, and Nisha will keep getting us the latest in terms of that big deal. But by the way, let's focus on the markets. The Nifty is now at the low point of the day. We're down more than 200 points, and there is selling across the board. TCS should come up for you on the screen. That's moved lower. It's broken the 1900 odd mark. So that's what's really dragging the index. You have Adani Ports as well that's moving lower. You have Cipla, as well as even Hindalco has started moving lower. So clearly there is selling across the board. Hindustan Unilever as well is moving lower. And that's why now in the final few minutes, the bit of a pullback that we saw, that's getting sold into. The Nifty has broken the 200 DMA, and now we're holding below the 10,750 odd. Ashwini Gujral as well had told us at the start of this show that, in fact, that's likely to be the trade. Hold on to those short positions. But we'll thank Deepan Mehta for joining in and in fact giving us all his views on a whole host of stocks. Thanks so much, Deepan. And I don't know whether you're with us next week, but wishing you a good start to the holiday season and hopefully the holiday week as well. But getting back to our some technical calls, Ashwini Gujral and Mitesh Thakkar, they are back with us to tell us what to buy today and sell tomorrow, or what to sell today to buy tomorrow. Ashwini, you go first. Tell us what's the trade today.
Okay, I don't know whether Ashwini can hear us. Mitesh, can you hear me? What would your call be now? I mean, the Bank Nifty is now down almost 500 points, 450 points. What would you do at this juncture?
In fact, I have two STBT calls, and one of them is Adani Ports. Intraday charts have broken down. I was looking at a target of around 360. It's already met that in the last 20 minutes since I sent the mail, so avoid that. But Bharat Forge is a sell with a stop at 516 for targets of 485.
Okay, all right. We've got Ashwini back with us. Ashwini, your trades for today, and that short call is working out perfectly. The Nifty is now down 205 points. But tell us, what are the trading ideas you've got?
I like to see, what the market is doing with good and bad news. IT space, the rupee has, I think, recovered 50 paise from the lows, 55, and it's going to the cleaners. So that means that there is more downside, because if both IT and banks, they start to fall like this, I don't think any support is going to hold on. So on intraday rallies, if you get any, you should be selling into the market. That could be 100, 150 on, Bank Nifty, or 50 odd points on the Nifty. But it's fairly clear that the market trend has changed. In fact, for the moment, what you want to do is Tata Global, that's a buy with a stop of 212 and look for targets of 228. Adani Power is a sell with a stop of 52, target of 46. And Tech Mahindra is a sell with a stop of 704, target of 680.
Okay, in fact, the Dow futures are now down over 100 points. So, Ashwini, what would you do if you have short positions? I mean, would you close them by the end of trade today, or would you let them run into Monday?
See, it depends. If you took them 50 points higher, maybe you can take profits and enter again on Monday. But if you really have them by their neck, 10,900, 950, thereabouts, then you can even carry, this guy is not going to recover. In fact, what I feel is that we will fall harder. We were being held up because of certain events we thought were positive. And now on the other side, it's going to be as sharp, because there's no correction. I mean, 200 points on the first day itself means that there is further downside. Now let's see where we go. My broad sense is, we are in that 10,000, 11,000 band. And finally, we'll get closer to those levels.
Well, earlier today, we spoke to Andrew Holland and began by asking him about his views on the Indian markets, given the slowdown that we have seen across the globe. Let's take a look as to what he had to tell us.
If global markets, say, were to fall or continue falling, then we'll get dragged down. There's no doubt about it. because the risk of trade will come. But in that fall that we see, that's the opportunity, because what I see from the US now, we can talk about whether it's going to go in recession 2019 or 2020, but it will at some point go into a downturn. And it's the corporate sector that's got the problems, not the financial sector. And I think this time it's different in terms of where the pain's going to come from. Therefore, if it's a corporate earnings problem or a debt problem, then yes, it will have an impact on some of the banking stocks, but it's not going to bring to the floor like it did in 2007, 2008. So I think it's a different way of kind of looking at this risk going forward. So we will get dragged down, but those I think are the opportunities that we need to kind of take into account and not be so fearful at that time. India, as you know, is we're either super bullish or super bearish. There's no in between, right?
Andrew, I wanted your thoughts on how to approach autos in 2019, because there is a slowdown definitely. I mean, Maruti has cut their estimates to 8% growth this year versus a double-digit growth earlier. You think it's just going to be a temporary blip, and is this a good time to be accumulating your favorite auto leaders?
Yeah, I think so. I mean, obviously you have to be very selective. It's obviously like a Maruti now would be benefiting from the rupee appreciation. So, it gets a bit of a tailwind behind it for the time being in terms of margin improvement. But, we're coming off very, very high growth rates. So, it's a slowdown from higher growth rates rather than it's a real, big problem. I think also the MBFC problem that we had obviously, pushed up interest rates in the very short term, and that I think helped defer some of the purchases. But I listened to what Maruti said the other day, that up until the elections, things are usually slower. So let's work on that basis. But what I do feel is that if the government gets that consumption, going in the rural area, then you could see a pickup in the second quarter of the financial year for these companies. So maybe it's a one quarter kind of bit of pain for them, or slowdown from the heady growth rates. But it's not a sector I want to be kind of short on. It's always going to provide you good opportunities, because everyone has different products at different times, and therefore market shares can change, and that's what you look to play in this sector.
Andrew, two brokerages told us that probably in 4 years' time, we are going to see power capacities being inadequate. At the moment, of course, they are in such surplus that they're going to the bankruptcy courts and nobody's buying them because they're so indebted. But the argument is that there has been no investment in power for such a long time. And as demand grows at the clip of 6.5% to 7% CAGR power demand, then the supply will catch up at some point in time. Would you go long on something like a BHEL, considering that already L&Ts of the world have started rising?
Yeah, I'm not sure. Let the supply be met first before I start looking 4 years ahead. So I'm not sure I'd buy into that. I think I'm more of a buyer into the private capex cycle starting to pick up in the second half of the year. The RBI told us that capacity utilization is running at 76%. So if you're going to, if there's a stable government, sometime next year when the elections are finished, then obviously, companies will have to go out and start building new capacity at some point, and I think that's the second half. So that's what I think is going to be the way I'd play the kind of the whole capex cycle, rather than think about whether that supply is going to be met by demand in 4 years' time.
Okay, the private capex cycle is something that everyone is betting big on, but the market just looks like it's taking a turn for the worse. Sudeep Bandyopadhyay joins in now. Sudeep, hi, afternoon. What do you think is causing this sell-off? I mean, there is a global growth concern that has dragged down a lot of markets, but we were outperforming up until now. What happened today?
Well, Sonia, I think, I'm actually a bit surprised. Probably the market should have started coming down even earlier. Look what's happening in the global markets over the last week, 10 days. All the markets have been coming down, and India has been very clearly outperforming these markets. So some amount of profit-taking, sell-off was expected. And look, if you look at last 10, 15 days, we just came down yesterday and today. So I would say this is more or less on the expected lines. There is absolutely nothing wrong in particular with Indian markets that it has to come down today, but it was on the cards. It had to happen somewhere, and that's what is happening. Having said that, I think we continue to maintain our cautiously optimistic view for the next calendar year 2019. I maintain my view that there are a lot of interesting pockets at attractive valuations, and some of these, the market fall is an opportunity for accumulating good stock.
Well, it is turning out to be quite an anticlimax. After what was a fairly decent week, the market has just given up all of its gains and in fact will close below the 200-day moving average. We've been speaking with Sudeep Bandyopadhyay, Ashwini Gujral and Mitesh Thakkar. We're counting down to the last 10 minutes of trade. Sudeep, you were telling us how that you found it surprising because the market should have corrected earlier than it did. But how do you approach the new year? Would you be cautious? Would you raise your cash levels because there are a lot of big events lined up, or would you look to sort of nibble into this market now?
I will definitely look to nibble into the market, Sonia. I think we have seen significant fall in the markets in 2018. If you look at the entire year, maybe we are marginally 1 or 2% up. But the fact remains that a significant portion of the market, particularly the mid-cap and small-cap, has corrected significantly. Some of the FII favorite mid-caps have moved up in the recent rally, but by and large, the mid-cap and small-cap sector is down. And look, there are very interesting opportunities in the mid-cap universe, definitely, and those needs to be bought into. We believe that 2019 will be the year where probably we will see mid-cap and small-cap come back. I'm not sure about the index level, but there are a whole lot of stocks which are very interestingly poised, and these are definitely good opportunities for acquiring. Once a rally starts, whether it's a pre-election rally or post-election rally, it may be a little too late for acquiring stocks. So for an investor with a slightly longer term horizon in mind, I think it's a good time to start buying into stocks.
Okay, all right. Good time to start putting some money into stocks is Sudeep's view, and he believes 2019 as well will be a better year for mid-caps. Sudeep, if you're looking to buy various themes, what would those themes be and what would the sectors be? Would you be looking at putting money in IT, pharma, the defensives, or would you be looking at more in terms of the domestic capex cycle turning, cement, infrastructure?
Well, I think I'll be a little cautious on cement, Nigel. Look, cement has been a favorite, but it hasn't really done anything great. We have seen the demand going up and the volumes moving up in the last quarter, but somehow they haven't been able to increase the prices. So the pricing power which enables the cement companies to turn incremental profit is still not visible. So I'll be cautious on cement still. There are pockets of outperformance, but I'll be generally a little cautious. What I'm looking at really is select pharma stocks and some of the chemical companies. Look, I think the Indian manufacturing, as far as pharma and chemicals are concerned, there is definitely a significant scope for outperforming the other sectors. And these are the sectors we are looking at. If you talk about pharma, definitely, some of the names like Natco Pharma, Aurobindo Pharma definitely look good at current levels. As far as chemicals are concerned, Aarti Industries is a clear favorite with significant outperformance possibility in the medium to long term.
Okay, we have about 4 more minutes to go. Ashwini, we'll close at the low point, which is of course always a bad sign for the bulls. What would the strategy be for Monday if someone has not taken a short position today, missed out on the move today? Does it make sense to take a fresh short position on Monday?
No problem with not taking short position, but don't go home long. On Monday, whatever rally you get, 100, 150 on the bank nifty, maybe 50, 60 on the nifty, the first response should be to go short, because mild correction would have been over at 10,750. This does not look like something is getting over here. So if you do get a gap up, because of US market, whatever, and that gap up should be used to sell, because we're still towards the higher end of the big range.
All right, Mitesh, what about your closing strategies for today? The markets have, they have ending at the low point of the day. What would your trade be?
See, I think a similar kind of thing. I think we actually started shorting slightly late in the day once the 10-20 level gave away, and we are about 55-60 points away from that. So any 30, 40, 50 point kind of a pullback, if it happens, should attract more shorts. Keep a stop below 10,835, try to short around 10,800, and 10,700 should be your first target. If that breaks, another 200 points could happen. So directional bias has changed with this with today's fall, and I think now any rallies would be good opportunities to look at some shorting opportunities.
Okay, interestingly, the stocks that have gained the most this year are the biggest losers this week. So Infosys and TCS will both go home with about a 4 to 9% fall this week. Infi is down 9% this week. So a lot of damage there. Even names like HUL have fallen about 3-4% this week. Before we wrap up for the day, Ashwini, any thoughts on how to approach these large cap IT names now?
See, that is where it seems that some sort of global slowdown is now getting priced in. They are off the rupee play, and hence the IT index is closing at the lows. My sense is now we have the global slowdown to go with. So whether it's IT or banks, most things will go down.
All right, just 2 more minutes left for the day and the week to wind down. So let's just take stock of where things are. It's been such a disappointing day. As we've been telling you all through, the market has slipped to the low point. The Nifty closes with a 200-point cut below the 200-day moving average of 10,765. And the big losses today came in large caps like IT. So you had Infosys that was down almost about 3-odd%, TCS down about 2.5-odd%. Apart from that, names like Maruti Suzuki have been falling quite a bit. Second day running now, there's a steep fall there. In fact, this week, this week is not too bad for Maruti, down about 1.5% or so. Apart from that, some damage in the NBFC names. Indiabulls Housing Finance under pressure. Other large caps like Reliance were down almost about 3-odd% or so. On the upside, oil marketing companies bucked the trend. HPCL, BPCL up almost about 1 to 2-odd%, while Coal India was one stock that was up almost about 0.5% or so. So all in all, Nigel, a very disappointing day for the bulls, and the market breadth was quite weak today.
That's right, Sonia. If you're looking at the breadth of the market, you had only around a stock that was advancing for nearly around 3 stocks that were declining, struggling to find winners today. But if you had to pick a few, well, CG Power was one stock that looked good. That ended with a gain of around 8.5%. There was a large trade that took place there. So otherwise, no real big green on the screen. You had a couple of infra names like IRB Infra and Reliance Infra that, remember, have seen a sharp correction, but both of them, did manage to end in the green. So Reliance Infra as well as IRB Infra did have green, but otherwise plenty of red on the screen. Godfrey Phillips was down 5.5%. Tata Communications as well did sell off, and a couple of these lenders as well did see selling. So Shriram Transport was down nearly around 5% odd, and we've been talking about the recovery that we're seeing on ground in the capex recovery. There was no real sign of that, at least in terms of a stock performance. You had, Cummins that was under pressure, NBESCC as well, that did see some selling, and even some of these cement names, something like a Ramco Cement, that was down nearly around 3.5%. Not great news for the bulls today with today's cut, and in fact, today's cut was primarily because both the pillars of the market, the Nifty Bank as well as the IT index, both of them ended with cuts. And post those cuts on the Nifty, for the week itself, we have turned negative, and for the month as well, the Nifty has turned negative. Well, quick check then as we wind down. The Nifty has ended at around 10,750 odd mark. Let's quickly, in fact, squeeze in one question to Sudeep, who's with us as of now. Sudeep, what about something like a Titan? At one point of time, everyone was getting quite bullish on Titan. The stock has corrected a goodish bit. It's returned back to around that 900 odd levels. But we've seen the stock bounce up from these levels. Your view out there?
Well, Nigel, I've been bullish on Titan throughout. In fact, when the stock corrected significantly and it was hovering below 800, I was recommending everybody to buy. I continue to remain positive on Titan. I believe a long-term investor should buy Titan even now at current levels. Look, I think it's the jewelry company. If somebody wants to have a company in their portfolio, this has to be Titan. There is no other competitor really who is worth talking about at this stage. There are other businesses which were kind of pain point, whether it's watches or eyewear, both have started showing good trends. The management is confident of 20% plus growth. So I have no hesitation in recommending Titan to the investors even at current level.
Okay, all right. Thanks so much for that, Sudeep, Ashwini, as well as Mitesh. Here's wishing you all a pleasant weekend. Have a good time off.